Let's get some greater detail of what he is watching. Pete McGuire joining us from XM. Pete, a very good Monday morning to you. Thanks for joining us. Lots of earnings results, of course, but just on the data front, what are you watching for this week? Because we do have those Fed minutes. Got the minutes locally as well.
Of course. Good morning, Andrew. Yeah, I'll be watching a bit because I'm interested in the Fed minutes and certainly what they say here. And retail sales in the US, I just want to see, appetite and how consumption is and, the health of the US consumer and under the weight of inflation and how that all maps forward. And if we see another rate rise in September, or do they sit on their hands and we roll into 24 with possibly 130 basis points of cuts over that calendar year?
Well, yeah, interesting because off Friday we got producer price index numbers there higher than expected. So that, I guess, was a bit of a concern for the markets off the back of better than expected consumer prices. Nonetheless, You take a look at those bond yields at the moment, Pete, they continue to move higher. Why is that?
Well, I tell you what, I spoke with yesterday with a comment that came from Bill Gross, and naturally the bond king, and he's saying that your 10-year will be looking at possibly around that 4.5, 4.6 sort of number. So when I listen to the bond king, I've got to take on board, where we're looking and what the pathway forward is. And if it's going to edge up higher, then that's going to be just, I think, a global situation. They'll all certainly ratchet higher to maybe that point. So that's where we're going to sit with Andrew and just see what consensus is and how the market interprets that, and naturally across currencies and then to commodities and stock indexes.
Well, okay, let's check in on currencies there. What are you seeing with the US dollar at the moment, Pete?
Well, it's nearly at 103 for that US dollar index, Andrew, so it's edging up higher, and maybe you're going to see, depending upon the minutes coming out and general sentiment, maybe a 103.10, 103.20 by end of week. We did say last week that we'd see the Aussie probably nudge towards that 64 handle. Well, it's through there now, so maybe 64.5 for us. Seems to be a one-way traffic at the moment, and that's softer. So there's the thoughts there. I'm looking across to the pound because they've got data coming out this week, and naturally the euro sitting at that 109 sort of number. Keep an eye on oil, Andrew.
All right. Well, let's check out commodities. Okay, so let's start with oil there. Of course, it has rallied in recent times.
Yeah.
We take a look at certainly the supply side of the equation. We know that Russia and in particular Saudi Arabia pushing forward those cuts to production. On the demand side, though, what are we seeing there? Because concern remains out of China, of course.
Well, it does remain, and that's a concern naturally for China and domestic demand. But if you're looking at global appetite, it seems to be picking up. IEA numbers suggest it's going to be relatively strong for the back end of 23 and then naturally into 24. So the impact as far as those production cuts are going to be felt, and I think they're starting to be felt now. And you've got Brent sitting there at 86.5. It's well bid up from those mid 75 to high 70 sort of numbers. So if it's approaching 90, and that's not a good sign. Great for a producer, Andrew. Certainly not good for consumers on Main Street. So that's going to be interesting how that plays out for the rest of this calendar month.
More broadly, what are you seeing in the commodity sector? Is that dollar really dragging? I mean, copper has come off again. Those commodity prices are struggling more broadly.
Well, they are. Copper had a nice run up to 88, nearly 8,900 a metric ton. Now it's back at 8,300, so it's given up all of that hot steam. And that was probably off the back of that the situation with China. How aggressive are they going to be as far as stimulus? We're still, sitting on our hands, waiting for some direction there. And naturally, they produce out of metal, they produce finished goods, and they need to be sold both internally from a demand picture in China, but then of course externally from an export model. And if it's weak consumption globally and people are struggling to pay for meals and the cost of living, then you're not going to go out and buy a new fridge, Andrew.
Yeah, well, that's true. Pete, what are you seeing with precious metals at the moment? Gold continues to weaken. And I guess the story was that it was expected to go the other direction because of anticipation that the US in particular was looking for a recessionary conditions. But looks as though, the sort of broader consensus now is that it may well achieve a soft landing.
Yeah, may well do. And I suppose I still believe its best days are ahead of it as far as till the end of the year. I'm not backing down from that 2,200 handle because there's so many investment banks that are saying the same. And of course, the appetite from governments globally to, stockpile gold. So I think that consumers are doing it, certainly across the world. Jewelry consumption's up, and naturally buying, ingots and silver and gold. So I think it's got further to run, and just be patient, because like anything that becomes exhausted, and then people sell it down through paper, in other words, futures markets and so on. So yeah, it's got some good days ahead of it, Andrew.